every business will continue for an unenforceable future period without having an intention to close their business.
Practically, normally, no one will open business in the expecting of
No, exactly. That's a general presumption. General presumption. Even you start a particular the boutique, that man is not going to close the business in 2 months or 2 years time. He want to prosper in his personal life by making the business better. So that's the normal thinking. So financial statement, when you prepare, you should keep this assumption along with that. Okay, so completed this one.
So this is called going concern concept.
Yeah, I will be writing some more. Close their business or severely curtail its operation. So this is what the going concern is all about. Done? I will add some more points here. When and only when a business has a valid going concern assumption. Sometimes we call it principle. Sometimes we call it presumption. Sometimes we call it assumption. But all same meaning. Okay? Assumption. When and only when and only when a business has a valid going concern assumption, only then the financial statement classified as current and non-current. Is that clear? Faham to?
يعني 700% because I
So,
want to translate some words.
no problem, I will explain you again, but where you don't understand, tell me. You forget about this writing. Inta faham to the concept. What I told you, you understood.
Yeah, I understand, but I want to translate some.
Yeah, that you do it later in general. Overall point what I'm saying about going concern. Is that clear?
Clear.
That's all important. Yes, sir? Good. Now, okay. So, if another point, if the business
Okay.
does not have a valid going concern assumption, I write FS. FS is financial statements. Okay? The financial statement should be produced on a breakup. I hope everyone knows the meaning of the word breakup, right? You know breakup? He knows. Yeah, sir? You know what the meaning of breakup?
Yes.
Breakup
Should be
on a breakup value. Go up.
should be
Should be produced
produced.
on a breakup value. Now what the meaning of this breakup value? If you know that you close in the business, tomorrow you're going to close, then you cannot, can you keep this table here?
No.
No. Then you need to find a Bengali guy to come and take this. Shawalala.
Yes.
Am I right? Then this Bengali man will ask you how much. You would have, at the time of buying this table, we would have paid maybe 800 real or 1000 real. That Bengali guy, he will talk a lot of things and he will ask 50 real. Experience have or no? I have too much experience. When I'm shifting my house, when I buy all new items, sofa, the bedroom, TV, washing machine, fridge and everything, all brand new. But at the time I was going to Sri Lanka, I was like, I almost got heart attack. The complete bedroom set, sofa, TV, washing machine, fridge, table. He asked me 1,500 riyal. I was like, what to do? 2 days time I need to fly. What can I do? I said, okay, Allah kare. So this is when you produce the financial statement. If a business, you know that, is not on a going concern basis, the values what you're going to show in your balance sheet. No point of keeping the historical value. No, I paid this for 1,000, I will keep 1,000 and will you sit and cry? I can't. If that man only takes 50 riyal, the balance sheet I should show only 50 riyal.
That's the difference between depreciation and this one. That depreciation means
Net book
yearly.
value will be there. Okay, let's say now I purchased this for 1,000 and my depreciation rate is 5% or 10%. After 3 years, how much net book value?
5,000.
I purchased only for 1,000. 10% depreciation. 3 years finished. Now what is the net book value? 700. Now at that time I am closing the business. So there's no question of the net book value, depreciation, historical value, and that Bengali man won't understand anything. Right? He will speak Arabic language which he only understand, and then he will come and tell, okay, comes in the albas. Then you have to pay that. That's it. Accept that. So that is the value that I need to show it in my balance sheet. Maybe I will not sell tomorrow, but I am sure I am closing. Now this business is closed. So sometime this table will be there for the next 2 years. No one comes to buy. But when you produce the financial statement, when the business is not having a going concern basis, then you should prepare based on breakup value. Breakup has different meanings, right? Are they? Yes. Okay, so let's try this question now. If anyone have book, please don't see. Just see the question. I will share the question. Yeah, Baha, what's the problem? Ask me.
Going concern, what's meaning in Arabic exactly?
Then I will not be able to answer. Then you should tell. Wait, we'll find out. I will explain you the mechanism. You try to figure out a word in Arabic, or the Google will help you. So I share the question to you all. Please try to answer. A retailer commences business on 1 January and buys inventory of 20 washing machines and each costing $100. During the year, the retailer sells 17 machines at 150. Now tell me, without reading all this, how many machines he is having in his hand now? 3 machines. Cars. How should the remaining machines be valued at 31st December if the retailer forced to close down his business? At the end of the year, the remaining machines will realize only 60 each in a forced sale. So what should be the value? 180. Is that clear? This is what I am trying to tell.
Again, please.
Brother, you have 20 machines.
Okay.
Okay? You paid how much?
100.
100. So total 2000, right?
Yes.
Okay. Now you were able to sell 17 machines.
Okay.
Colors. Customers took 17.
Okay.
3 is with me.
Remain.
Normal
Yes.
thinking, I need to continue my business.
Okay.
But here they are saying, forced to close.
Close. Okay.
Next day you are closing.
Okay.
And in this situation, these 3 machines, each you can get only 60 riyal or $60.
For one.
For one, yes.
Okay.
See, realize only 60 each.
Okay.
When you say each means for one.
Yes.
How many I have?
180.
180. I have how many pieces? One month by any.
Talata.
So then 60 into 3, you will get only 180. That is the value. Now you may sell tomorrow, next week, next month. But question now, today, what is the value you are going to place?
Okay.
Based on how much you will get by forced sale. Taking to souk garage and selling there. Understood? So that is, so the first answer is 180. Second one, how should the remaining machines be valued at 31 December if they intend to continue their business into the next year? 3 into 3 into 100. But you paid 100.
Yes.
So this is the historical cost.
Mm.
And since you continue in the business, you could still find normal customers. So your value should be, Baha, you understood or not?
Understood.
So it should be 300. Is that clear? So this is the example to give an explanation how we incorporate going concern into a question. Clear? Let's continue.
So in short, sir, if it is going concern concept,
It's very-
historical
it's very-
cost has to be maintained.
Yeah, no, I mean, only historical cost. Later we talk about that. There's a different argument for that also. But normally, the original cost should be made. You don't say historical cost, just say original cost. Original cost is 100.
If the business is going to shut down,
Shut down,
Then
then
it will be net realizable.
net realizable value or the breakup value. So the breakup value here, you forced to sell for 60 each, and we have 3 pieces. 180.
You need here number only. Because,
Yeah.
Because the first one,
Question is
how
how-
should the remaining machines?
Be valued, yes.
Ah,
Hmm.
okay.
Answer is $180. Second part answer is $300. Bas. Clear? Okay. Okay, and one more note we will write. Where is my pen? If the business is not on going concern, the FS's financial statement should be produced accordingly. What do you mean by accordingly? On what basis? On the breakup basis. And it should be disclosed
According what?
accordingly.
According
I will write it fully. Clear now?
yes.
And it should be disclosed. The what I mean by that? Now, in the financial statement, in terms of numbers, you present according to breakup basis. But the layman, a user who doesn't understand accounting, he may not know that the financial statement is prepared on a breakup basis. So what you need to do, you also need to say that, look, gentlemen, this financial statement is prepared on a breakup basis. You have to say that.
Because we are going to close the business.
Exactly. You need to say that as well. So you need to prepare and you need to say. It's like this. The auditor, when come to talk about auditor, should be independent. What is the meaning of independent?
Yeah.
From the company, he must not have any relationship. And also, auditor should be, appears to be independent also. See, he should be
That is the reason.
independent.
Audit report, the auditor's report is coming separate.
Yes. Auditor should be independent, and number two, he must be, appears to be independent. What I am trying to say, make a point. What point I am trying
Outside,
to
you
make?
should be a person in an organization or something.
I didn't understand.
Outside person, you should
Yeah,
be a part,
especially external auditor.
external.
An external auditor cannot be a staff of the company.
Independent on what?
Totally. He cannot have any relationship with the business. He cannot have any influence by the owner. So, or the manager, or the director. Now, if the director says, okay, now tell this color is green. If he is an employee, he need to receive next month's salary. He will say, okay, sir, green. But auditor, no, he can't say that.
So,
Whatever you say, the color is white only. So that is independent. Number two, more than independent, he should be, appears to be independent. What do you mean by that? Now, when the staff is going to restaurant, auditor should keep a distance. Auditor must never go and sit together and eat together. And when the staff is going on a social trip, going to watch a movie, auditor must not join them. And when any common party, it is okay to attend a party, but always he should maintain a distance. He should be, when you see, we must not get a feel that he is now mixed with the team. Especially, you know, Western country people, they drink. So this auditor also drink, the accountant also drink. So even you should not go to the same bar. That's how the appears to be independent comes. And also from our village, there's an example. Now I don't know what to say in English. Palm tree. You know palm tree? That there's a tree like same like dates tree, same like that. From that they take some liquid which is same like liquor. So a man sit down there and drink milk. Someone sees from outside, what they think? He is drinking liquor. So, same story I am trying to say. If you are an auditor, you behave like auditor. You don't try to behave like a friend or a close mate of the staff, and then the users of this report will not have a trust on you.
Governance.
That's the governance, exactly. Clear? Okay. So, I was writing something here, right? It should be disclosed, the fact, okay, that's done. So that is all about going concern. Now next concept, accrual basis. Any idea what is accrual basis is?
Especially you mention of future.
they expect the losses to be accounted in the current year.
We don't call it losses. We call it expenses. It's like this. For example, let's say suddenly one day I got a phone call from one of my uncle living in London. My son, I'm very happy about you. I'm going to send you 5,000 pounds. So he is very trustworthy and normally he is a very good man. And he suddenly tell me, next month he is going to send me 5,000 pounds. So now what I'm doing, I'm very happy and I'm going to be rich now by 5,000 pounds. So I will start spending money depending on what the promise he gave. I go to party, I go trip, I go book cinema, and I do everything based on that 5,000. This phone call came, let's say 18th of March. On 28th of March, he is again calling you. Unfortunately, son, I lost my job. So I'm not going to get any salary, so I'm not going to send you money. What will happen to the money you spend now? Kalas. Then you will go to hell only. You cannot do anything. So, the concept is saying, you never anticipate. Especially when it comes to the
Receivables.
incomes. So anyway, what is accrual basis is, that is actually a separate concept. I will come to that little later. Accrual basis is saying, good example is, you don't recognize things only based on cash transaction. Now, one customer came to me this morning and paid me 10,000 riyals. And the agreement between that customer and me is that he need to pay me 12,000 riyal. Total he need to pay me 12,000 riyal. The sales value is 12,000, but he paid me 10,000. Now I need to pass a double entry for sales. How much I should recognize?
Then the amount
Say-
is 12,000.
Let's say I have sold this item. This item, my selling price, agreed selling price is 12,000. But the customer paid me cash 10,000 only. Now my question is, in my books, as sales, how much I show? I should show 12,000. Later we talk about double entry. So total 12,000 is my sales and the customer paid me 10 and 2,000 receivable. Correct? So if you just say that no, customer only paid me 10,000, so sales is only 10,000, that is wrong. That's the concept that we are talking about now. When it is an accrual basis, regardless of the cash transaction, paying and receiving. Let's talk about a different example. I want to pay my electricity bill. The bill is showing me 1,950. I took 2,000 riyal and gave it to my office boy or the mandub or messenger, or I am going personally, and I paid 2,000 riyal in the machine to the Karama. Karama gave me a receipt for 2,000 finished. But the bill I have, how much? 1,950. So how much expense I must show? 1,950 only. But then, how much I paid? 2,000. So there is a 50 riyal difference is there. This 50 riyal is my money is with Karama. Now think about the reverse, opposite scenario. A bill came for 2,100. I paid only 2,000. Now how much expense I should show? 2,100. And 100
Payable.
is payable. So accrual basis, when we producing our financial statement, we produce our financial statement on the basis of accrual assumption. That's how we are showing receivable in our financial statement. That's how we are showing prepayments in our financial statement. That's how we are showing accrual expenses, payables in our financial statement. Is that clear? So let's write it down. And also there is another name for this. There is another name for this. Matching concept. You would match.
So the same.
This is the same thing. Actually, to be honest, If you ask me 100%, it's not same. 99.9% same. There's a 0.1% difference is there, but we don't need to worry about it. Especially, you know, these A-level children, they speak about those differences. For us, we don't need to worry about it. So, almost matching concept and equal assumption or basis are same. Anyway, we'll write it down. All revenue and expenses should be matched within the same accounting period. Now, if I to draw a diagram
Should be matched.
in the same matched within the same accounting period. If I to draw a diagram here, let's say we are preparing accounts for 2021. December 2020, a customer paid me 120,000 riyals. He gave this money against some purchases he will make during 2021. Some purchases he will make during 2021. So, on this date, what is the first date for 21? 1st of January 2021, correct? And this date is what? 31st December 2021. On this date, now the business has got any money from the customer? How much? 120,000. This is known as advance receipt. Sometimes we call it deferred income. What do you think, is an asset or a liability?
Liability.
It's a liability. Suppose, also this goes with our Islamic principles also. You receive the money of someone and unfortunately you die today. You have not fulfilled the performance what you promised. So don't you need to repay this money back to him? You have to repay this. So that is what we call liability. So it's you should show it under what liability? Non-current liability or current liability? Current liability. And another scenario, you have one supplier. You purchased. Let's say here you on 5th of here in 2020 December, you purchased something for 80,000 worth of 80,000 worth of items, but you are not paid yet. This is also a liability. This is a trade creditors. This is not deferred income. Two different thinking. Understand me? And you receive electricity bill here. You receive electricity bill here, and that bill showing 2,150. But you paid only 2,000. So 150 must be shown as accrued expense. The name for that is accrued expense. How to say in Arabic?
مصروفات مستحق.
Masrubat mustahak. So that is this. Conversely, you receive a telephone bill here, 1,650, and you have paid 2,000. Opposite of that. That is called prepayments.
مصروفات مقدمة.
Muqaddama. So two different scenarios. And this is a liability. And this one is how much? 350, right? And this 350 is what? An asset. And this liability is a current liability, and this liability is the current asset. This is exactly what the accrual basis is.
So under current asset, it will come like accrual.
What do you mean? So this one, you should show prepaid expense under current asset. But this one, you should show accrued expenses under current liability. Later we talk about the double entries, then you will understand even clear. Now I am just trying to explain the concept. Is that clear? Okay. Now, this one please go through on your own, you will understand. I'll just read. Ima purchases 20 t-shirts in her first month of trading at a cost of 5. How many t-shirts she purchased? 20. What is the cost of each t-shirt? 5. So total 100. Then she then sells all of them for 10 each. So how much she will get? 200. And has therefore made a profit of? Very easy. What we call that? A simple life. Matching the revenue 200 and against the cost of 100. This is exactly the accrual concept what I am trying to say. In the same period, whatever the revenue you generate should be matched with whatever the cost you incurred. All of Emma sales and purchases are on credit. No cash has been received or paid. So all 20 t-shirts she purchased $5, she didn't pay. What do you call this? Trade creditors. How much? 100. And then she sold all of them for 10 each. So how much? 200. Did she got money? No. Wow, what do you call this? Trade debtors or trade receivables. If however, now see the scenario. He only sells 18 t-shirts, not 20. 18 into 20. Correct? No, I'm sorry. 18 into 10. So 18 into 10 is 180. And how much is the cost of that 18 t-shirts? 90. So how much the profit she would have made? 90. You see here, the sales 18 into 10, 180. Purchases how much? 20 into 5, which is 100. But how many t-shirts he sold? 18. So are we having any balance?
Yes.
How many units balance?
2.
That is his stocks. 2 into 5. That is
10.
10. So what is the difference?
9.
90. This 90 we name it cost of sales. Later we will study in detail, but that is cost of sales. And you subtract this, you get the difference. This difference is how much? 90, and that is profit. Is that clear? So now this 180 is cash sales or credit sales? Credit sales. So this is receivable. This 100 cash purchase or credit purchase? So this is payables. Clear? Okay. So that is that. Okay. Exam focus point. ACCA examining team commented that questions on the conceptual framework have been particularly well answered in the past exams. Students are good in this area. So now we talk about qualitative characteristics of financial information. Like when you are building a house, for you to say that building is done in a good way, there are some good points. Same like that. When I am preparing my financial statement, we have to develop based on some good points. That points are this, or pillars. Pillars of my building. Pillars of my financial statements are these. Actually, these are divided into two. One is the fundamental qualitative characteristics, the basic ones. And then also we have enhanced. There is one more. Enhancing, yes. So we have fundamental and so if I write here qualitative characteristics. One is fundamental spelling correct? Yeah. The other one is
Quantitative checks the financial information.
yeah, enhancing. Characteristics of financial information. So qualitative characteristics of financial information.
Second
One,
one. Second one, what?
enhancing. 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 So this fundamental, there are two characteristics. One is relevance, other one is faithful representation. Okay, we will try to understand these two words. Relevance, faithful representation. So what is relevance actually? I have an example. If I say these people will understand, you will not understand. Means brother, if I am going to school, I need to follow a certain uniform. Let's say I am wearing a coverall and going to school. You know coverall. If you go to plant, the helmet and the goggle and the glasses and all that, then you go to classroom and sitting there.
Taking a bucket soap and going and ask where you go.
Yes, exactly. Yes.
You're going to bath.
Yes. So relevance is to your financial information must have only relevant information in the financial information. You are preparing a financial information for business one. So your financial information, whatever should be available there, should only talk about business one. If you try to bring other stories about business 2 or 3 or 4 in this financial information of business 1, will there be any useful? No. So this is whatever relevant information, what is available must be there. Is that clear?
Okay.
And our accounting period is January to December 2021, let's say. So when I am preparing my financial information statement, I should only include the transaction that is related to this period. If I try to put December 2020 or January 2022, is it any useful? No, this is going to give a different wrong meaning and understanding to the user of the financial information. And also, the person who prepared the financial information must be a qualified, experienced, knowledgeable person who understands the numbers, what is there. If you get someone, any Tom, Dick and Harry who is walking on the road and getting to prepare this and then produce, and that also not relevant. And another way to say, your financial information must be relevant to the whatever the decision the user is going to make. Correct? Let's say in a department, in a company, you have a production manager and you have a human resource manager and one clerk accumulated information related to attendance, and he produced a report, and then he sending this report to let's say marketing manager. Will it be any useful to that? So it's no relevance, no coordination there. He's going to check what the hell is this. Then that should be given to the human resource manager for him to make an analysis as to how the staff is coming, poor attendance, and then rewarding some staff and sending warning letters. Everything can be done based on that report. But if that is given to the marketing manager, he cannot do anything. So, when we producing our financial information, must have relevant information only. Is that clear? Okay, now let's talk about faithful
Relevance was very
relevance.
relevance.
Yeah. Reliability is something else. Okay, here it is we are talking about relevance.
Okay.
Faithful representation. Forget these two words. Faith. What is the meaning? Trust. When you prepare a financial information, we should be able to trust that. We should be able to depend on that. How? What are the conditions for my financial information to be trust? One condition, that must be neutral. Should not be biased. Let's say two shareholders. You are working in a company, there are two shareholders, they are bit always having a different dispute between those two then. You are just a finance manager reporting to both of them. But you are a bit friendly with shareholder A, not with shareholder B. And if you produce a financial information which will favor shareholder A, that is not faithful representation. So it must be neutral. In other words, you cannot have any bias. The word bias is B-I-A-S. Bias. Should not be bias. Bias means supporting,
No partiality.
yes,
Taking sides.
no partiality, exactly. Or supporting one person, or as he says, taking side. Second point is, Adam,